Hey, welcome back to the channel. I'm Emmett Dempsey. Today we're talking about how much mortgage can I afford? It's a question that a lot of homeowners should be asking themselves when they're out shopping, thinking about buying a house. Definitely you want to know the numbers. And that's what I'm going to help with you today. We're going to do an exact calculation, a good rule of thumb, so you can get a pretty good answer to that question. And for those of you who don't know, I'm Emmett Dempsey, mortgage broker and owner of Treasure Coast Mortgage here in Port Saint Lucie. And on this channel, we talk more about mortgages, the home buying process, and some cool things around Port Saint Lucie and the Treasure Coast. So if you're new here, please think about subscribing. Okay, how much mortgage can I afford? So we're going to go into good rules of thumb, and everything begins and ends with your income. Okay, so income is one of the number one things, probably the most important thing, where it's a starting point for everything. So in this example, we're going to use $10,000 a month just because it's a nice round figure. So you make $10,000 a month gross income, household income, or whatever it is. So that's where we'll start. So you take $10,000 a month divided by 2. So roughly 50% is kind of like the maximum that you qualify for. So 50%, so basically $10,000 a month leaves you $5,000 left. Okay, next we're going to look at your own bills and figure out what your fixed payments are. Now the fixed payments as we see them is anything installment loans, any car payments, signature loans that are installments, and minimum payments on your credit cards. So let's just say that's $1,000. Again, nice round figure. So we did 10 divided by 2 is 5, minus 1,000 is $4,000 left. Okay, so that's $4,000 left for a mortgage payment. So that's generally what is the maximum that you can get is that $4,000. Now the next question is, will you have enough cash to close? So, and also what is my mortgage payment? One good rule of thumb that I've come across is basically the $7 per thousand rule. And what that is that for whatever home you want to finance, you take the loan amount divided by 1,000 times 7, and that's basically your full mortgage payment. And it usually overestimates, which is good. It kind of puts you in a good spot. So let's do an example. So basically, you look at say a $300,000 loan, divided by 1,000. Times 7, roughly $2,100. So in this one, in this example, you had $4,000 left, $300,000 loan, you can afford a $2,100 mortgage payment. Now, this is not to say that there's rules of thumb in for financial planning and things like that. There's other ratios, 28, 40, 31, 43. There's a lot of different rules of thumb out there. This video is specifically about the maximum you can afford. I'm not saying that's what you should get, but it's really what is possible. And that's what I do is I lay out options, what's possible, and then you decide if that monthly payment fits your budget, and then if it works into your financial plan. So that's in a nutshell. Like I said, to recap, you start with your income, divided by 2, subtract all of your monthly payments, things like that you're obligated for, and then you kind of just figure out mortgage payments. You just figure out, okay, so here's what I have left after the mortgage payment, and that's the first piece, whether you can afford the payment. The next piece is, of course, if you have enough cash to close. Generally, the minimum is 3% on conventional, 3 to 5%, and then 3.5% on FHA. Again, with closing costs as well, and to figure out if you have enough cash to close. So that's a general one over the world about how much mortgage you can afford. If you want your own personal consultation, please go to my website, dempseymortgage.com. Thank you so much for watching, and I'll see you guys on the next one.